Today, we're cracking open the latest intelligence right from the heart of the private markets.
Yeah, looking forward to this.
Our focus is the 10th annual SS&C Intralinks LP Survey key findings. This is produced with Reuters Events. And look, this isn't just another survey. It's pretty much the definitive pulse check on limited partner, you know, LP sentiment.
Exactly. It gives us that crucial roadmap for what LPs are thinking, what they're planning for the next, say, 12 months.
And it's based on solid ground, right? This isn't just a handful of opinions.
Oh, definitely not. The survey, it pulls together insights from over 280 LPs globally, so you get a really powerful cross-section of the market.
Who are we talking about specifically?
Well, you got leaders from pension funds. They make up about 28%. Then portfolio and asset managers, insurance organizations, both around 19%. Family offices are in there, 13%. Wealth managers, 8%. Sovereign wealth funds, 7%. And then, a smaller slice from fund of funds and other alternative investment pros. It's a broad church.
And geographically, you said global, but where's the focus? Does that spread, show different vibes in different places?
It's pretty spread out, which is great for a holistic view. We've got North America leading representation at 35%, then the UK and Europe close behind at 32%, Asia Pacific at 18%, and Latin America at 14%.
Yeah, okay.
And yes, we'll definitely dig into some regional shifts later. They're quite interesting. But the main themes we're about to unpack, these seem to resonate pretty much across the board.
Got it. So for you listening, whether you're a GP prepping your next fundraise or just someone tracking private capital, our mission here is clear. We want to pull out the key nuggets, right? What LPs are planning for alternative allocations, how they feel about the market, and crucially, what they expect from GPs this year.
And there are some genuinely, surprising findings to discuss. We'll look at how current portfolio performance is really boosting LP confidence.
Okay.
And, where LPs are actually planning to put their money in the next year. We're talking specific sectors, but also a geographic shift that might raise a few eyebrows.
Right. And it's not just about the money, is it? It's also about the relationship. We'll unpack what LPs expect from GTs now, especially since fundraising is, pretty competitive.
Exactly. And tech plays a huge role. We need to talk about generative AI, how it's being used for monitoring, and this whole digital transformation piece.
Plus the challenges. Can't ignore those.
No, definitely not. We'll cover the big hurdles, the opportunities LPs see, those persistent macro worries. What's really insightful, I think, is looking back over the last decade. How have these feelings evolved? What does that mean for GPs now?
Okay, let's get into it then. So despite all the noise about interest rates, inflation, the usual suspects, the big picture from LPs is surprisingly optimistic, buoyant even.
It really is. And it's not just pie-in-the-sky optimism. It seems largely driven by portfolio performance just being better than they expected.
Right.
And private equity specifically seems to be on a real hot streak, building on last year's momentum. That helps explain why so many LPs are looking to increase their allocations.
So what are the numbers behind that feeling? How good was performance?
It's pretty staggering, actually. Think about this. 98%, almost every one of the LPs surveyed said their portfolio performance was above expectations over the past year.
98%? Wow.
Yeah. And if you drill down, nearly two-thirds, so 60% of LPs said their portfolio actually exceeded expectations. Only a tiny fraction, 4%, reported performance below what they hoped for.
That 98% figure, it really changes things, doesn't it? It means LPs are negotiating from a position of strength. They've got capital, they've got confidence, and probably higher expectations.
Exactly. So for you as a GP, it's not just about asking for money anymore. You've got to show how you're different, how you're transparent, what your vision is, beyond just pointing to past returns.
So where's that confidence translating into actual investment plans? Which asset classes are getting the love?
Well, private equity is still, the favorite child. 36% of LPs pointed to PE for the best risk-adjusted returns. That continues the trend from last year. But hedge funds aren't far behind, cited by 30%. So that strong performance really backs up their plans to allocate more.
And those allocation plans themselves, they sound ambitious, but is there any caution mixed in?
That's a good question. There is a bit of nuance. Almost everyone, 96%, said they expect to increase their alternative investments over the next 12 months. So the direction is clear.
Right. Increase.
But here's the catch. The size of those increases might be a bit more modest compared to previous years. Only 12% expect their allocations to jump by more than 10%.
Oh.
Last year, roughly double that share said the same thing. So yes, growth is expected, but it seems like more, let's say, measured growth this time around.
Measured growth. That's interesting. It suggests LPs aren't just chasing yield blindly. So if the increases are more cautious, where exactly are they looking to place that capital? Let's talk geography, because you mentioned a surprising shift.
Yes, this one really stood out. Even with all the global uncertainty, the UK and Europe have actually jumped ahead. They've surpassed North America as the preferred spot for investment.
Really, ahead of North America.
Yeah, 34% of LPs want managers to put capital into the UK and Europe in the next year. That compares to 32% who prefer North America.
Wow, that's a flip, because last year...
Exactly. Last year, it was heavily skewed the other way. 48% chose the US and Canada. So this is a pretty significant shift, a reprioritization of where they see opportunity globally.
That's huge. So for you listening, you need to think about why that is. Is it about valuations, regulation, different growth prospects? What's the story there? And what about specific sectors within these regions or globally? Where's the action?
Okay, sector-wise, we see continued strength in the usual suspects. Financials are popular, backed by 47% of LPs. Technology still strong at 36%. These feel almost foundational now.
Standard plays.
Right. But what's really interesting to me are the kind of emerging categories. Renewables are strong, 30%. But then look at private credit. 54% of LPs plan to invest there. That's leading the pack.
54% in private credit. That's
Right.
massive.
It is. And then you've got digital assets, things like crypto, attracting 51%. Impact investments at 42%. Even fractional ownership, art, music royalties, pulling in 19%. So quite a diverse mix beyond the traditional core.
Private credit is definitely having its moment. Steve Cook from Sequoia Investment Management had a really good quote in the report that kind of explains that 54% figure.
He absolutely did. It was quite powerful. He said the truly gigantic physical needs for infrastructure globally are driving demand for private credit. Basically, there's no other obvious source of debt funding for these massive projects.
Yeah.
It just highlights how fundamental that demand is right now. It's almost like, infrastructure itself.
Yeah, it frames it really well. Okay, shifting gears slightly, let's talk tech. Specifically, generative AI, it feels like it's everywhere. How are LPs actually using it?
They're definitely using it. A huge majority, 86%, it said they're already using Gen AI or similar tools to monitor their investments or performance.
86%.
Yeah.
Already using it.
Yeah, and they see the potential. 92% describe the tech as transformative.
Yeah.
So for GPs listening, this isn't some future thing. It's happening now. Your LPs are using this tech, and they'll expect you to be on the same page with data and reporting.
But is it all smooth sailing? Are GPs meeting expectations on the tech front? Any frustrations?
Well, generally, GPs get good marks for their tech capabilities. Only 1% of LPs were actually unsatisfied, so that's good.
Okay.
But there is a clear pain point. Nearly a quarter, 23%, expressed frustration about not getting enough access to analytics.
Ah, okay, so the tools might be there, but the insights aren't flowing easily.
Exactly. That's a key takeaway for GPs. You might have the tech stack, but if LPs can't easily get the stats and insights they need transparently and quickly, then it's a missed opportunity for building that partnership. Gen AI could potentially help bridge that gap, of course.
Makes sense. So, okay, we have this backdrop of optimism, strong performance, tech adoption, but what are the clouds on the horizon? What are LPs most worried about?
It really comes back to those persistent macro concerns. Stubborn interest rates, the risk of inflation may be made worse by tariff talk and trade tensions. Those are top of mind.
How many cited those?
Both were cited by 36% of LPs as their biggest worry for their alternatives position. And right behind that, 32% pointed to concerns about equity market contraction.
Right.
So for GPs, it's not just about showing good numbers. You also need to show you have a plan, that you're navigating these bigger systemic risks effectively.
And one last piece, the GP-LP relationship itself. The survey said 93% rate it as good or excellent. That sounds great on the surface.
It does sound great.
But in this competitive fundraising world, is good actually good enough anymore? Especially if, 75% of LPs are looking to add more GP relationships?
That's exactly the point.
Yeah.
Good might just be the baseline now. LPs started 2025 feeling positive, not just because of performance, but also because those relationships were generally strong.
Yeah.
That 93% figure is remarkable. And that positive feeling is probably why over 3 plan to increase the number of GPs they work with. But to really stand out now, a GP needs more.
Like what specifically?
Proactive communication, for one. A real willingness to collaborate on those analytics we talked about. Maybe a shared approach to things like ESG or impact. It's shifting, I think, from just a transactional thing, capital for returns, towards a more genuine partnership, where LPs feel their specific needs and long-term goals are really understood.
That makes a lot of sense. Okay, that was a fantastic deep dive into the 2026 SS&C Intralinks LP Survey findings. Let's just quickly recap the big takeaways for you, the listener, to help you navigate things.
Yeah, let's summarize. First off, that overwhelming positive vibe is key. Remember, 98% of LPs saw above expected performance, and 60% said their portfolio exceeded expectations last year. That sets the whole tone.
Right. And private equity, still king, with 36% citing it for best risk-adjusted returns, though hedge funds are close behind at 30%. So PE remains a magnet, but expect more competition for that capital.
And the intent to allocate more is definitely there, 96%, plan to boost alternatives investments. But remember the nuance. Growth might be more measured this year. Only 12% expect increases over 10%.
Don't forget that geographic shift. The UK and Europe pulling ahead of North America as the preferred destination, 34% versus 32%. That's a major rebalancing act underway.
Sector-wise, keep an eye on financials, 47%, tech, 36%, and renewables, 30%, but also those emerging alternatives. Private credit leading the charge at 54%, digital assets strong at 51%, impact at 42%, even fractional ownership at 19%.
Yeah, and that Steve Cook quote really speaks the gigantic physical needs for infrastructure driving that private credit demand because, well, where else will the debt funding come from?
Exactly. And AI's impact, undeniable. 86% using it already for monitoring, 92% calling it transformative. But watch out for that 23% frustration on analytics access. That's an area GPs need to address, and maybe AI can help.
Right. And finally, those persistent worries. Stubborn interest rates, inflation, both 36%, and potential equity market contraction, 32%. They're definitely tempering some of the optimism. Vigilance is still needed.
Absolutely.
So these findings are really crucial for you as you plan ahead. Think about how these LP preferences, these challenges, will shape your own strategy, your decisions, your understanding this year. It's more than just data. It's like a compass for the private markets right now.
Which leads to a really interesting thought, doesn't it? You got 75% of LPs wanting more GP relationships. You've got this huge demand for deeper insights, for better analytics, and you've got AI potentially changing the game. So how will the roles, the expectations for both LPs and GPs actually change? Is it moving beyond just capital flow towards something more, I don't know, more like a truly transparent, data-driven partnership?
That's a great question to ponder. It's not just about the what anymore, but the how of the relationship.
Exactly. Building something more informed together.
A powerful thought to leave you with. Now remember, this was just a preview.
That's right.
You can download the full 2026 SS&C Intralinks LP Survey key findings right now. Check the show notes for the link, and definitely mark your calendars for September 2025.
Yeah, that's when the full report drops, with even more detailed, deeper dives into investment behavior, regional trends, all of that.
We'll certainly be keeping an eye out for it. Thanks for joining us. We'll be back soon with another exploration.